They are huge compliance burdens. You have to work out how your good is going to be taxed, and it isn't always obvious immediately how it's going to be taxed. And there are these hundreds of court cases where people with big brains and lots of human potential are just pouring it into working out things that are just utterly trivial. This is a really big waste of our time, that we're trying to levy a system that has all these crazy zero rates. Hello and welcome to the IFS Zooms In. I'm Helen Miller, Director of the Institute for Fiscal Studies. Today, we'll start with a quiz. What do strawberry Nesquik powder, marshmallows and chocolate-covered shortbread have in common? Well, one answer is that they are all subject to value-added tax, VAT, at the standard rate of 20%. Unlike chocolate Nesquik powder, mini marshmallows and chocolate-covered shortbread that has a layer of caramel. Those things all get a 0 rate of VAT. And what, I hear you ask, justifies these differences? Well, I think the answer is nothing. These are just a few of the very many completely ludicrous examples of how the UK's VAT treats very similar things very differently. So today we'll wallow briefly in some of these examples, which I think have some comic value the first time you hear them. But since they create a whole bunch of problems that are no laughing matter, we're also going to talk about how we can fix our value-added tax. And the core problem with the UK's VAT is that it's changing behaviours in lots of ways that the government doesn't intend. I don't think they actually care how big your marshmallows are. But having all these arbitrary differences is creating a huge compliance burden and lots of problems. And actually the way to fix it is pretty simple, at least conceptually. But we'll unpack what that means and what the government could do about it. This episode is part of our mini-series on how to fix taxes, and I'm once again joined by my two colleagues, Stuart Adam and Ben Zaranko. Stuart, as regular listeners will know, has been working on the design of the UK's tax and benefit system for over 2 decades. He was an editor of the IFS Merley's Review, which is a huge, comprehensive study of the design of the UK's tax system. It comes in 2 big books. He was also, which is relevant for today, the lead author of a 600-page report just on the VAT. So he is perfectly placed to talk about how that system works and doesn't work today. And Ben is here to keep us out of the weeds, and if the previous episode didn't to go by, to keep us away from talking too much about cake. Let's get started.
Okay. Again, as someone who's never written a 600-page report about VAT and was not involved at all in the Merley's Review, I will do some question asking, so I'm not required to answer questions. VAT, value-added tax. What is it? Very short version, Helen.
It is a tax on spending.
So it's something where if you go to the shops and you buy a nice new washing machine, some of the price you are paying is VAT.
Yep, we'll unpack some of the details, and not everything gets VAT added to it. But very broadly speaking, yes, you go to the shops, you buy some stuff, and there is VAT added to the price.
Okay, and VAT is a big tax. That's right?
It is. It's our 3rd biggest tax. It raises about 180 billion, which I think is about 15% of all tax revenue. So it's a chunky one. Okay,
so it's sizable, and it's become more sizable relative to the past. Stuart, do you want to give us a very brief potted history of VAT and why it's become more important?
Yeah, VAT is a relatively young tax. It was only introduced in the UK and indeed in lots of other places in the 1970s. And what we've seen is that the main rate has gone up a number of times, most recently from 17.5% to 20%. It's one of the early tax changes made by the coalition government that came in 2010. And so as the rate has gone up from its introduction to its current 20%, we've seen that the revenue that it brings in go up accordingly.
Okay. Very quick aside, which we might want to come back to. I think it's interesting you mentioned the coalition raising VAT from 17.5% to 20%. That was a big tax rise, right? That was a big, definitely double figures, billions. It was a big chunky tax rise. But it's interesting that they got seemingly into less political trouble over that than when they tried to levy VAT on hot pasties, which is something we might come back to. So, if you're listening to this and you work in the Treasury, sometimes the political cost isn't always corresponding to the amount it raises. Okay, economists tend to be quite fond of VAT, and there's lots more countries around the world have introduced a value-added tax over time, partly because economists have advised them to. Why is that? Why do economists like it? Why is it a good tax in principle?
So the nice feature of VAT is that as a tax on consumption spending, if it's done well, if it's done properly, it doesn't distort people's savings decisions, it doesn't distort investment decisions, it doesn't distort the way that firms choose to produce things, and it doesn't distort trade patterns. So it has a lot of advantages in terms of not messing up the economy in a way that lots of other taxes do.
Shall we talk a little bit through that? So the way that most people will interact with VAT is in the prices they pay in the shops, but actually a lot of the features you're talking about there relate to how it applies to businesses and business transactions. So do you want to maybe talk us through quickly why that is?
Well, the advantages that I've been talking about are essentially a consequence of the fact that what ends up getting taxed is just sales to households in the shops.
Okay, and that's because if I'm a business and I buy a part or a component or a service from another business, do I pay VAT on that?
Well, you can reclaim any VAT that you pay on it. So if you want to tax sales to households, to final consumers, we don't want to tax sales from one business to another, because that then distorts the production process and leads firms to want to produce things in a way that uses the fewest taxable inputs. There are two ways that you can do that. One way is to say, in law, we are only going to levy tax on sales to households, but that then forces shops to distinguish when they're making a sale, is the person buying it a household that's going to consume it, or are they a business that's going to use it as an input for what they're doing? And that's a hard thing to ask businesses to do, and they haven't, frankly, got an incentive to check that they've got the right answer. The other way to do it is to charge VAT on all sales, and this is what we actually do, charge VAT on almost all sales, but then if you're a VAT-registered business, you can reclaim any VAT that's been charged on your input. So essentially, the tax paid by the seller can be reclaimed by the buyer, so there's no net tax on that, it all washes out. We end up only taxing sales to final consumers.
So the only people who can't reclaim it are those at the end of the chain, if you like, the household who buys the eventual good or service.
Yeah.
I think the way that works is actually kind of neat. Maybe it's worth doing a quick example just to cement the idea for people. And we'll come back to this later when how it doesn't work. But in the textbook case, let's imagine that, I buy some wood and I'm going to plane that wood down, make it nice and smooth, turn it into planks. I then sell the planks of wood to Stuart, who's going to make a table. Really beautiful table, and Stuart's going to sell the table to Ben, who's going to put it and use it for his coffee. So I'm going to charge, when I'm selling my planks of wood to Stuart, I'm going to charge VAT on those planks of wood. Stuart's then going to do his stuff. He's going to add some value to that wood, make it into a table. He's going to sell that table to Ben. He's going to charge Ben VAT. So I will have remitted some VAT to the government. Stuart will have remitted some VAT to the government, but when Stuart's sending his VAT to the government, he'll be sending how much he charged Ben minus how much he paid to me. So he'll just be paying he'll be sending the additional amount of VAT to the government. So VAT is being collected along these production chains in little bits, but when you add it all up, it's only the value of the final consumption, the final table in this example, that's really being taxed. There's this chain that's going through production, but means that you're only taxed final consumption.
It's clever because it's a tax on the value that's been added.
At each stage.
At each stage. Very clever. Okay, so that's important, but what's often great in principle, in practice often bumps into difficulties. So, okay, to start with, do we charge VAT on all goods and services?
No.
What do we not charge VAT on?
Well, there's two types of sort of things that we do. So one is there's zero and reduced rates, and there's exemptions, and they're importantly different. So perhaps we'll do the exemptions first, because it relates to this chain that we just set out. So in the chain that we just set out, Stuart, as a table maker, is a VAT registered business. So he charges VAT when he sells stuff, but also he can reclaim the VAT that he's paid. Now, exemptions mean that you're outside of the VAT system, and that breaks the chain. So it would mean that Stuart wouldn't be able to reclaim VAT on the inputs, and therefore that nice chain we set out breaks. So that's one class of ways in which the current VAT system as operated differs from the kind of textbook VAT. And that's a problem, because the minute you have the break in this chain, then you're not getting the nice properties that Stuart set out front. You are distorting decisions over what to produce and what to buy and who produces things.
Okay, so two questions there. One, why are some businesses exempt? And then secondly, can we unpick a little bit what problems that creates in terms of the distortions you're talking about? So who's exempt?
The biggest exemption in the private sector is for financial services, are exempt from VAT. There's also a lot of public services, and the public sector is exempt from VAT, though that gets more complicated in terms of special arrangements for some public sector bodies. And it's also changed recently because private schools are now within VAT, although some other education is still exempt.
Okay, I'm starting to see where those 600 pages came from. Are there any other big categories we should be thinking about here? Those are the main ones. So I think one question that might come to mind is, why on earth are we exempting financial services? Shouldn't those big, very prosperous companies be paying more in VAT than other people?
Yeah, historically, I think the main reason for exemptions from VAT was because it wasn't obvious how to do it. And in particular, the examples we've been talking about so far is where you've got a shop and they sell something and you pay a price for it. Now, if you think of financial services and just think of, straightforward retail, high street banking as an example for that, I don't buy something from the bank and pay them money for whatever I'm buying. I just put money into a bank account, or I take out a mortgage or a loan or whatever from them. And the way banks charge me for that, the way they cover their costs and make a profit, is essentially because they pay out lower interest rates on people who've got savings accounts than they charge to people who take out loans. And so because they get more interest in from people who get loans from them than they pay out to savers, they make money from that. But that's not a price that you can easily see, well, the borrower or the saver is paying this much. And so it wasn't obvious how to levy VAT on it. Now, one interesting thing that's happened since the introduction of VAT is essentially that people have figured out how you could do this in ways that are equivalent to what a VAT does. And so in particular, you can think of one example is a cash flow tax, where if you just tax all payments going into the bank and deduct anything coming out of the bank, then you end up with something that essentially taxes the implicit charge for financial services that's there in the difference between the interest rates they pay and the interest rates they charge. That's quite complicated to get your head around. I would also add there are several different equivalent ways that you can do this. There is, in fact, an entire chapter in the Merley's Review just about the different ways that you could levy something equivalent to VAT on financial services. But the bottom line is just, originally exemptions were there because we couldn't figure out how to tax them properly. But now we have figured out how to tax them properly, and we probably should.
Actually, go back for that. We probably should. I mean, we should, because by not bringing them within the VAT system, we do create a whole bunch of distortions. Not just that there are some forms of financial final consumption that aren't taxed. There are also some businesses that are using inputs, like financial services, that can't reclaim the cost of those inputs, and that's also getting things wrong. So this matters not just for we're not taxing some stuff at the final point, but also we're distorting production chains. So we're overtaxing stuff that uses financial products as an input.
And it also distorts the way that these exempt bodies do things. So if I'm a bank and I can't reclaim any VAT on inputs that I'm charged, that gives me a disincentive to, say, get my cleaning or my accountancy or whatever service done by a VAT-registered business that would charge me VAT on it. And it gives me an incentive to do all that in-house and hire people to do it for me, rather than getting it outsourced and have to pay this VAT that I wouldn't be able to reclaim. That one simple example of a much more general problem, that it distorts the way that production patterns work, and that just makes the economy work less efficiently.
Okay, so what I'm hearing is having exemptions means that people make different decisions to what they otherwise would. Businesses are structuring their operations differently from how they otherwise would, buying different goods and services than they otherwise would, or perhaps from different organisations. And that's not good, because that takes us away from having a neutral tax system that treats things the same. And it might be difficult, but what I'm hearing is you might need another 600-pager from Stuart, but it's not beyond the wit of man if we want to try and tax these things. If we wanted to, we could probably find a way to do
We've
it in
already
a
got the
sensible way.
600-pager. It exists. It's out there. We're good to go.
That's right. I wonder why it's not on everyone's bedside tables. Okay. Where do small firms come into this? Like very small firms, one-man bands and the like.
So briefly, there is a threshold. It's £90,000 below which you do not have to register for VAT, and therefore you're not in the VAT system. You actually can elect to register for VAT. So if you're the kind of business that actually is buying lots of VATable inputs, you might want to choose to register so that you can deduct those inputs, so you can be in this chain that we were talking about.
And also, if you're selling your outputs to other businesses that will be able to reclaim the VAT anyway, then there's no harm in having to charge VAT on your outputs because they can reclaim it, whereas not being able to recover VAT on your inputs will be a real problem and just make what you're doing more expensive for your customers. So if you're selling primarily to other businesses, you can choose to register for VAT and it will generally be worthwhile. Whereas if you're basically selling to final consumers, you typically will choose not to.
And there's always a debate about where to put that threshold. And actually, I think it's less obvious where to put it than it might sound. I mean, partly ignoring the kind of so there's a tax, and once you put some people in the tax, some people out the tax, you have some kind of competition issues. So if you're registered for VAT and you're adding tax and I'm not, then consumers will prefer to come to me than to you because I can have lower prices. But there's also just, and we'll come on to this maybe a bit more, there's just a big compliance burden for being inside the VAT system. If you've got genuinely a very, very small business, it's not clear that you want to put them into all of the compliance of having to deal with and register for and administer a VAT.
It's just a faff.
It's a faff. It's a cost. It's a cost. And therefore, there's always a question about where do you put that threshold. And you bring it down. You put more people into the VAT system. You get more revenues, but you also subject more firms to compliance costs. And therefore, governments are always judging where to put that threshold.
But if there's a threshold above which people really don't want to go because they just can't face the hassle and the costs of doing VAT, they have an incentive to not go above that 90k threshold and to try and keep their revenues there. Maybe they go on holiday instead of doing that extra job or whatever it is, so that can disincentivize company growth as well. That's something people often talk about.
Yeah, and so what you see is there is a large concentration of firms with turnover just below that £90,000 threshold who are clearly there because they're trying not to cross over that boundary. Now, they might be trying not to cross over it because there's just an administrative hassle of having to fill in the forms and deal with VAT. They might be not crossing over it because there's then actually an increase in their tax liability, that they would have to charge VAT on what they sell, albeit being able to deduct the VAT on what they buy, and they just avoid that tax liability by not going over the threshold.
So I suspect where a lot of people might have encountered this is maybe you're paying a plumber or a builder or a DIY type person for home improvements, and then maybe they want cash in hand, or maybe there's different, you face different prices depending on how you pay sometimes, and some of that is, I assume, not all above board, but it relates to this VAT question, right? I think it's sort of part of what's going on there. Is that fair?
Yes, at least sometimes what's going on, I wouldn't want to say it's always what's going on, but at least sometimes what's going on is just straightforward criminal tax evasion of traders keeping stuff off the books so they don't have to report those sales and they don't pay VAT on them.
But could conceivably, if the threshold's like 90k, you've hit 89k on your official earnings, maybe that's an incentive to try and move to cash only to try and stop officially tripping that threshold. Do you think it could be part of the answer?
Yeah, I think that's one way that people might be staying below the threshold, is just not reporting any sales that were really above the threshold. But there are also lots of other ways they can do it. I mean, most straightforwardly just turning down work, not growing your business in the way that you might otherwise have done.
Right. Okay, so that's we've talked there about exemptions, but then you also said there's another whole category of things which is zero rating, which is different. Explain to me how and why.
So the standard rate of VAT is 20%. So most stuff gets taxed at 20%. But there are some goods that get taxed at reduced rate. Most notably, there's a reduced 5% rate for domestic use of energy, so the gas and electricity that comes into your home. And there are a whole bunch of zero rates. I think most noticeably, most food is zero rated. But there are also some other things like children's clothing is one of the ones that's often mentioned, where you're still in the system, so you're still in the chain, you're not exempt, you can still deduct VAT if you're a business, but you charge a rate of 0, so there's no tax on the final consumption.
And so the crucial difference there is both zero-rated traders and exempt traders don't charge VAT on what they sell. But if it's zero-rated, you can still recover the VAT that was paid on what you bought as an input. Whereas if you're exempt, you can't recover that VAT on your inputs. And that's what causes all of the distortions to behaviour that we talked about.
Okay, so why do we have zero rating at all?
Good question.
Why was it introduced? Is it, if I had to hazard a guess, is it because food is a necessity, children's clothing, we don't want children to be running around the streets naked? Is it because these things are deemed, essentials of life that we shouldn't be taxing?
Yeah, so I think if you trace it back, before we had the VAT, we had something called a purchase tax. Is that what it's called, Stuart? The purchase tax. And that arose in, the 1940s? And I think if you look back at that tax, then people, the motivation was about this kind of the necessities, and we don't want to tax those, but we do want to tax luxury. So the history is kind of back around there somewhere. But actually, it's not clear there is a very good reason to make these distinguishing between necessities and luxuries before you even get into how do you define what is a necessity and what's a luxury. And we should wallow at some point in just some of the bizarre boundaries between these things.
All right, do some wallowing then. Give me some of your examples.
Great, I can't wait. So look, the kind of iconic example are Jaffa cakes, where there was a big court case, decades ago about whether a Jaffa cake is a cake or a biscuit.
Why is that significant?
And it's significant because if it's a cake, it gets 0 rated, but if it's a biscuit, it gets taxed at 20% because the tax system has decided, for some completely arbitrary reason, in my view, to draw a distinction between biscuits. And not to go into too many weeds, it matters not only is it a biscuit, but is it a chocolate-covered biscuit, and what proportion of the biscuit is covered in chocolate and ... So Jaffa cakes were determined to be cakes, and there was literally a court case about how squidgy is the base and does it go stale when you leave it out and all this kind of rubbish.
They baked a giant Jaffa cake and took it into court. Would you call this a cake if it was the size of a normal cake? It was all about cakes going hard when they get stale, whereas biscuits go soft when they get stale. There were a whole bunch of arguments that went before the court. The bottom line is that Jaffa cakes are officially cakes.
Presumably they went through all this trouble because it means that when a consumer goes into the shops and is looking at what to buy, the Jaffa cake is 20% cheaper or whatever than it otherwise would have been. And
look, there were just tons and tons of examples that we could go through. I mentioned at the top, chocolate-covered shortbread is a chocolate-covered biscuit. Unless you add some caramel, then it becomes millionaire shortcake, then it becomes a cake, and therefore it gets lower taxes. Gingerbread men or gingerbread people, if you only have 2 dots for eyes, that's okay. That's 0 rated. Add a smile or a pair of shorts or some buttons. Now that's suddenly a chocolate-covered biscuit, and now you're adding 20% VAT. And it just goes on and on and on.
Have you got any examples that aren't cake and biscuit related?
Nesquik is a good one. That's not a cake or a biscuit, or it's also food. I mean, I actually looked back at the court case for this last night just to double check the facts here. And it's worth, I won't go through all of it, but it's worth just wallowing a little bit on how absurd this is. So chocolate Nesquik powder, so the stuff you put in your milk and you mix up, is not. There's 0 rated. But strawberry and banana are taxed at 20%. And the maker of Nesquik actually took this through courts. There was a big court battle about this. So lots of really smart people using lots of their time and energy to battle about this. And let me just give you a sense of how absurd this is. So the basic idea is that food is generally 0 rated, generally 0 rated, but there are a number of accepted items which are then standard rated unless the accepted items appear on a list of overridden exceptions. Right? So apply that to Nesquik and what it means.
You've basically lost me.
But this is the point. It's mad. So the maker of Nesquik went to court and argued that milk is not a beverage. That was their first argument, because beverage is an exception to the main rule, but there's an exception to the exception for milk. So is milk a beverage? That was the one. And why is it an argument? This is mad. Obviously, milk is a beverage, right? But it was in court argued about. Or the other argument was that milk is a beverage, but adding Nesquik doesn't make a new beverage. And therefore, it's not used in the preparation of a beverage. I'm going to stop there. But the point is, when you look through these court cases, it is, to an outsider, absolutely absurd and bizarre. These are arguments not about facts of reality. Obviously, milk is a beverage. They're arguments about how did somebody write down laws many years ago before they even knew Nesquik powder was a thing? And how does that now translate into current how we tax things currently? And again, there are just tons and tons of these. A recent one was like Walker's poppadoms. Like, the argument that went through court was about how much potato starch was used in the creation of this thing. Was it potatoey enough to get taxed in one way versus another? And people are pouring, or like marshmallows, normal sized marshmallows, tax at 20%. Mini marshmallows, or the big giant fat ones, both zero rated because they could be used to prepare something else, and so on and so on. And it's not just food. There's a cracking. This is better visually than it is on podcast, but there's a cracking thing. The fur skim flowchart is something to behold. You start with thinking about what kind of fur, make a coat, what kind of fur skin was it used? And it depends on like the kind of animal it came from, the origin of the animal, how it was, and so on and so on. Just utterly bizarre. We are drawing distinctions between things where there is no good reason for distinction. I feel I should stop there because I could carry on all day with how stupid this system is.
Can you relate this to what I mentioned earlier, the pasty tax thing from the 2010s or 2013, 2012, thereabouts? So that was a debate about whether to do with hot food. I can't remember. I wasn't working at the IFS at the time. One of you two who was, what can you just relate what that was about? It was about one of these boundaries, right? It was about whether something should be at 0 or should it be at 20. The government wanted to make it at 20%, would have made Greg's pasties and things like that more expensive in certain circumstances, and people didn't like it. But this relates to these sort of very fine distinctions that can have big impacts on the prices you pay in the shops.
So basically, in that case, there's a distinction between food that you buy to take home to eat and prepare, and food that you buy in a restaurant. And if you're buying something like a pasty at a shop, you have to work out, is it the equivalent of buying a pasty and taking it home and eating it, making it, or is it more equivalent to the restaurant? And where does that boundary fall? And then there are arguments about, how hot was the pasty when you bought it? Was it heated for the purpose of buying it to eat hot? Or was it just in the process of cooling down? You just happened to get it at a point where it was hot, and all this kind of stuff. And that was a case where the government was trying to move a boundary effectively and change what was taxed. And that became the omnichannel's budget, because I think the problem there was it was seen as targeting something very specific, pasties, and trying to put a tax on pasties. Whereas you rightly said at the top, that became a really big thing the government couldn't do, where actually raising the overall rate of VAT was a very easy thing, seemingly politically, to do. But the point is that we're arguing about where the boundary should be in the system, and there's just no reason to have boundaries. And look, stepping back, I said that these are funny examples when you first hear them, and there are lots of them, but these things really matter because they are huge compliance burdens. You have to work out how your good is going to be taxed, and it isn't always obvious immediately how it's going to be taxed. And there are these hundreds of court cases where really people with big brains and lots of human potential are just pouring it into working out things that are just utterly trivial. So this is a really big waste of our time, that we're trying to levy a system that has all these crazy zero rates.
It does feel like a waste of human effort and ingenuity to be trying to navigate this complexity rather than doing something socially valuable like planting trees or caring for the elderly or something. But okay, so that's zero rating and some of the absurdities that creates. Is the UK a particularly bad offender in this? Are we alone in having these bizarre court cases, or is this something you see everywhere?
We're certainly not alone in having bizarre court cases, but the UK does use zero rates of VAT much more than most other countries do. We are really an outlier in that respect. We actually use reduced rates less than many other countries. There are some places, New Zealand is the outstanding example of somewhere that just applies their VAT pretty much uniformly without zero reduced rates, without
on food,
exemptions. On food, basically on
children's
on
dresses.
Yeah. But as I say, even most European countries which have VAT systems more like the UK's, most of them don't actually charge zero rates of VAT on all the things the UK does. Many of them charge reduced rates of VAT, but not zero.
And perhaps it's a good time to point out, because some people, the minute you start saying we want to put tax on food and children's clothing, people will shout, how is that a good thing? Maybe it's worth pointing out that these aren't a good way of helping people on lower incomes. So you may want to help people on lower incomes, and people on lower incomes do spend a higher share of their incomes on food. but it's just not a very well targeted way of helping those people, partly because people like us also buy food, and often actually we spend even more in cash terms on food than other people. So if the idea here is that you want to help people who are on lower incomes, huge VAT tax breaks. And I think there's we spend something like 80 billion, I think, in foregone revenue from zero and reduced rates of VAT. So these are chunky tax breaks.
If you include exemptions, zero and reduced rates, it's over £100 billion the government gives up. We talked about VAT raising £180 billion, so it's a big fraction of the total.
So I think it's worth just drawing out slightly more. So what you're saying is we have zero rating on food, so we don't charge VAT on food, and that means we forego lots and lots of revenue. And it's true that food is a bigger chunk of what poorer households spend their money on, so they might feel they may be particularly affected. But richer households who are buying more luxury items or shopping M&S rather than Lidl or whatever are spending more in cash terms, and so benefiting more in cash terms. And so presumably, if you were to you want to levy VAT on food, you could use some of the revenue to help the people that you want to help. If you wanted to target support of poorer households, you could do that and probably still have some cash left over.
Yes, I think in principle that's right. And if you take one simple example, if you take children's clothes, it's true that children's clothes are a higher proportion of the budget for lower income households, but richer households still spend more on average on children's clothes than poorer households do. And that means that if you use the money instead of having this having this zero rate of VAT, if you use that money to just increase child benefit, a flat rate benefit for all families with children, I mean, it's means tested away from the richest now, but if we forget about that at the moment, that would actually be more progressive. It will do more to help low-income households than the zero rate of VAT on children's clothes. And it would also mean that they are choosing themselves what to do with their money. The system at the moment says, if I want to buy my children more expensive clothes, I'll get a VAT break for that. If I want to buy them more expensive toys, I won't get a VAT break for that. It's not clear why you would want to do that.
Out of interest, what about books charged? I was thinking there about if I wanted to buy my child food or toys or books, what do we do about books?
Books are also zero rated, as are magazines. Again, whether it really makes sense to say that if I prefer magazines to listening to music, then I should be taxed less heavily. But yeah, books and magazines are zero rated for VAT. And again, you can imagine the conversations people have got into, and to some extent policymakers and the courts have got into, about, well, what happens when we start getting digital books? And then what about audio books and other spoken word materials? And again, you can see where the difficult boundary issues come, and both, actually difficulties at the boundary and the court cases and the complexity of implementing it, but also the principal questions as to, actually, is there a good reason for taxing these things differently?
You used the word there, Stuart, which would have triggered my metaphorical bell. So you said something about it being progressive. So before my next question, can you just give me a very quick explanation of what progressive means?
Yeah, so in general, a progressive tax is one where better off people pay a higher percentage of their income or their expenditure in that tax. And contrary to widespread perception, VAT is best thought of as slightly progressive. And that's precisely because the items that are a bigger that are subject to zero and reduced rates, like food, domestic fuel, are a bigger share of the budget of poorer households than they are of richer households on average.
This is quite a common myth, though, isn't it, Helen? This is something that comes up a lot, and it relates to what we're talking about. It isn't necessarily the best way of helping poorer households if that's the aim.
Yeah. Yes, it's really not everyone. A lot of people seem to think that VAT is regressive, meaning that poorer households, if it were regressive, it would mean that poorer households spend a bigger share of their spending budget on VAT, and that's just not true. You can just measure that empirically, and we have done many times, and it's just not true. So VAT is not regressive. But more broadly, even if you are thinking about, so what one concern would be, and we should come to the solution here, one concern would be is if you increase VAT, won't that really hit the poor? And the answer is yes, it will hit the poor. But what we're arguing is that there are just better ways to help people on low incomes than to try to give these across the board VAT tax breaks.
And maybe it's worth trying to get into the weeds a bit as to as to why there is this perception that VAT is regressive. And the answer to that is that if you actually look at VAT payments as a percentage of income in any given year, VAT is a higher percentage of income for low-income households in any given year. The trouble is that's just not actually a good way to measure progressivity and regressivity when it comes to an expenditure tax. You're better off looking at tax payments as a percentage of expenditure. So because people who have low income in a particular year, almost by definition, will be spending a lot relative to their income in that year. But you can't spend a lot relative to your income over your lifetime. So over a lifetime...
So some examples here. So pensioners, for example, might have lots of savings that they're drawing on, even if their income isn't particularly high. Or a student at university might not have any income at all, really, but still be going out and spending a lot on, I assume, Jaeger bombs have VAT charged on them. If students nowadays still drink, I don't know if they do. But those sorts of things are what you've got in mind. It matters what you're measuring progressivity relative to.
Yeah, and I would argue that for an expenditure tax, you're better off measuring progressivity as a payment as a percentage of spending rather than payment as a percentage of income. And one reason for that is, if you look over a lifetime, where broadly speaking your lifetime income and your lifetime spending have to be the same, there's issues about inheritances, which we should probably not get into for reasons of time, but actually don't end up changing the argument. But over a lifetime, if your income and spending is the same, then what matters is that those that have a lower lifetime income and lower lifetime spending will pay less VAT as a proportion of that lifetime income or spending than someone with higher lifetime income and spending, because the items that are subject to zero and reduced rates are necessities. But actually, it's also true. I mean, that's true in a big sense of thinking about lifetime income and spending. But you can also say, if you're looking at the short run, there is a good case for saying, well, actually, your current spending is a better measure of your current living standards than your current income is anyway. And if you take two people who've got the same income, but one person is able to spend more because they can borrow or they've got savings to draw on than the other person hasn't, they've got a higher living standard. You could certainly say that they're better off. Do we really want to say VAT is penalising them by being a higher percentage of their income? Well, the right thing to do is to say, well, actually, let's look at how much they're spending. That's the living standards they're enjoying at this moment in time. And how much VAT they're paying as a proportion of that spending is probably a better measure of progressivity or regressivity, even in a short-run analysis.
Another common misconception, Helen, is that because VAT is a tax on spending, it's not a tax on work, you can whack up VAT without worrying about work incentives, which we talked a lot about in our first episode. Are those people right?
No, and I think the reason's fairly straightforward, which is just simply that a reason that we work is because we want to spend our money, and therefore if you tax spending, I get it reduces return to work, so I have a less incentive to work in the first place.
Yeah, if everything I want to go home and buy is 10% more expensive, my income is worth 10% less to me in a way, right? So it sort of does disincentivize working, even if it's not a tax on work itself.
So I think now we're circling around on lots of the problems with the VAT as it works in practice. There are exemptions, there are zero rates, and you can't really justify those zero rates as a way to help poor people. I think listeners will be able to guess the kind of big picture solution we have in mind, but let's just spell that out concretely. Basically, we're going to say that you want to broaden the VAT base and really apply the standard rate of VAT, whatever that rate is, to all forms of spending. That would bring some challenges with it about how you compensate potentially lower income people, and it would affect work incentives. But actually, there are ways to tackle those, Stuart.
Yes, I think we shouldn't understate that those genuinely are difficult challenges. So it would actually be relatively straightforward to use the revenue to compensate or more than compensate low-income households on average. But first of all, if you did that, then you would it would be very easy to end up weakening work incentives. So we gave the example earlier of putting VAT on children's clothes, but then increasing child benefit. Well, the one difficulty with that is that putting VAT on children's clothes would weaken work incentives for the reasons we've described, that actually the value of your earnings is lower if the stuff you buy, including clothes for your kids, is more expensive, whereas increasing child benefit doesn't symmetrically strengthen work incentives. It more or less doesn't have any effect at all. And so you would ideally want to find ways to compensate people that that also protect work incentives, so that, for example, do it by cutting other taxes rather than by increasing benefits. A second reason it can be difficult is that there will be some people who spend an awful lot on particular items, and you might say, well, okay, but if I happen to have a taste for certain things, then why should I get a tax advantage for that over someone who spends the same amount but has a taste for other things? But in other cases, like, for example, domestic fuel, domestic energy, you might say, well, actually, some people just need to use more because, they live in less well-insulated houses and so on. And of course, putting VAT on at the full rate on domestic fuel would encourage people to insulate their houses better and so on. And in the long run, you might respond to that by being able to move to a more energy efficient property. At least in the short run, there will be people who just spend an awful lot on those zero and reduced rated items. And so even if you're compensating people on average, you may not be compensating particular groups of people, and sometimes you think that's a problem and sometimes you think it isn't, but you do have to think carefully about the design of these compensation packages. So I think the solution that we're talking about is not quite as straightforward as it might sound at first glance.
Well, putting 20% on food and 20% on children's clothes, that sounds very politically simple and easy.
I certainly didn't say politically straightforward. I think even economically, it's not quite as straightforward as we might sometimes make it sound, but I think it is perfectly doable economically. I think the real question is the politics of it.
And that's, in some ways, that shouldn't be surprising. We're talking about tax breaks of over 100 billion. Of course, there are going to be costs and in terms of removing them. I think we shouldn't forget, however, that if we were starting from a blank piece of paper, it would be very hard to justify putting those 100 billion plus exemptions in the first place, and therefore trying to move towards a system that doesn't have them, I think, is a worthy end goal. But perhaps with that, maybe we should draw this to a close, or we could wallow in the VAT system all day. The VAT is a relatively new tax, and the textbook version of it is very attractive. It has lots of nice features. It doesn't distort savings or production decisions or trade, and that's why economists and governments have been attracted to it and are moving towards it. Sadly, the version we've implemented in practice leaves quite a lot to be desired. And we talked about the two classes of problems that arise. One from the fact that we exempt various goods and services, and the other that we have lots of various rates of zero rates and lower rates on particular things, including food. And actually there's zero rates and lower rates that are very hard to justify, for example, on the basis of being good ways to help poor people. There are other better targeted ways to help low-income people. We talked a lot about how the VAT has all these silly boundaries in it, the silly examples about gingerbread men and marshmallows and potato chips, and they're good for a laugh. But actually, the serious point is that they create huge compliance burdens, and we are wasting lots of our talents figuring out what side of a boundary something is on rather than working on more important problems. It would, of course, be a challenge politically and economically to move to a system that had the same rate on everything. But I think that's a challenge we should tackle. We have a system that could be much better in terms of fairness and efficiency, and therefore it's a problem that is worth having a go at fixing. But with that, let me say thank you to Stuart and to Ben. Thank you all to listening. And that draws to a close our current mini-series on how to fix the tax system. There are still lots of taxes left. We haven't covered corporation tax or many other bits of taxes, environmental taxes. There's still more that we'll come back to another date to talk about. So let us know in the comments what you'd most like to hear us talk about. But for now, thank you for listening, and we'll see you next time.